This is surprisingly good and unexpected for Tesla stock. And no, I am not talking about another buying opportunity. I am talking about Morgan Stanley. Can you believe this? Is saying that this sentiment around Elon Musk's ownership of Twitter could present a buying opportunity for Tesla stock. This is a big deal. I mean, we are talking about Morgan Stanley that said Tesla stock could be worth $10. That's before the 5-for-1 split and then 3-for-1 split. We are talking not about a $10 price target. We are talking about a 66-ish cent target. This is not Stephen Mark Ryan saying this is a buying opportunity. This is a financial institution saying it's a buying opportunity. Possibly, we're going to go through this report here. I got into Tesla stock in early 2019, and then this report, I remember, comes out, and I was like, what is going on? Did I make a mistake? For one brief moment, I gotta say, I question myself. For one moment, this was part of the reason. If you take this half star from Gordon Johnson, I know, it's surprising he does have half a star. How come it's not a 0? That's a little bit surprising, but you take that half star and you put that towards Adam here from Morgan Stanley, and you have 5 stars. I also like to pay attention to what Wall Street has to say. Maybe because if I didn't start my own business, I would have been an investment banker or worked for one of those firms. But Adam is in the top 1,000 when it comes to Wall Street, so I think it is worth paying attention to what he has to say. Well, specifically, this is Morgan Stanley overall, but let's dive in. Price target of $330. That usually means 6 to 12 months. Tesla shares are currently in the throes of bearish sentiment momentum. That's quite a way to put it. Investors appear increasingly concerned over the potential for effects on consumer sentiment that could impact Tesla's business near term. I feel like telling my friends that like watching TV, cancel your Netflix, cancel your Hulu, cancel your HBO, cancel your cable, buy Tesla stock. Being a Tesla stock investor, especially recently, this is like the most entertained I have ever been in my life. It's a lot of drama. It's a lot of fun. Controversy creates uncertainty. We had a lot of those controversies. I don't skip my leg day. At least I try not to. I don't want to have chicken legs. In our opinion, one of the main drivers of Tesla shares to TerraCap status in recent years was the ability for investors to confidently model the economic outlook for the company's core EV and energy storage businesses supported by a favorable economic backdrop. Of course, this backdrop is now looking increasingly cold. Get ready, people. The winter is coming. But don't you worry, we got Elon Musk, that's our dragon. He, I believe, will keep Tesla warm during this winter. Let's hope we don't have a cold recession here, but let's continue. In what ways could sentiment on this topic materialize to Tesla? Consumer sentiment demand. There could be some customers that may not wish to be associated with the controversy. Now, I also been seeing the opposite, where you would think only people from one political party would, let's say, buy Teslas before. But now people that have been on one side, let's say in Texas, are now buying Teslas because they like what Elon is doing, as an example. So I think this has 2 sides to it. I don't think it's all downside. Commercial partnerships. While Tesla is a highly vertically integrated company, it remains reliant on a host of commercial partnerships, both upstream and downstream, that may not want to be associated with certain levels of controversy. Fair. Government relationships and support. Tesla's industrialization of renewable ecosystems and onshore battery development requires close cooperations with sovereign entities, particularly in the US and China. Investor sentiment and capital markets participation. While Tesla is largely self-funding today to achieve the growth implied in its current $600 billion market capitalization, will require a continued strong relationship with the investment community. Now, this is one reason why I would prefer to pile up the cash just a little bit more so that we don't need to later go into capital markets and raise money if terms are bad. So this is where the opportunity comes in. Potential Tesla sentiment concerns and deaccelerating EV demand, particularly in China, could see Tesla test our $150 bear case before year end, which is approximately the price that Tesla traded at when it was added to S&P 500. I think there is currently, and I will make a separate video later today about this, but there is no doubt an issue at this very moment in China for vehicles at current prices, which is still, by the way, a net increase, a small net increase from where we were in the beginning of the year. I think Tesla is more likely to cut prices than to keep them where they are right now in China. I will elaborate more on that in the next video. We would prepare for price cuts to follow in Europe as Giga Berlin begins to surpass production of 5,000 units per week. And we would expect US price cuts to be initiated sometime in the first half of 2023. That's interesting that they think that. The backlog looks pretty strong in Europe at the moment. Interesting. And we would expect US price cuts to be initiated sometime in the first half of 2023. With the $7,500 EV tax credit coming out, it would appear to not be exactly very reasonable to think that there would be a price cut in US. Troy thinks prices could be increased actually. So that's interesting. That they think Tesla would cut prices in the US. Although if they did, it would be no problem because Tesla's margins, I need to make maybe another video about this. Tesla's margins based on the region where they sell their cars, US is like close to 40-ish% at current prices. And a large reason for that, gross auto margins, that is, a large reason for that is because in the US, people buy the more expensive models, and in China, the margins are much lower because people choose the least expensive model. At our $150 bear case price, Tesla shares would trade at approximately 12.5 EV EBITDA and 23 PE. That would be quite something. On our 2025 forecast, which we see as excellent value for a self-funded 20 to 30% top-line grower in top position to benefit from re-architecting the US onshore, nearshore, friendshore renewable supply chain at scale. This is also the sentiment that I feel as well. The more the price drops, the crazier it becomes not to buy Tesla stock. And I see with retail investors, Tesla stock is going down. Sell! Sell! The fundamentals are not changing. Profits are increasing. PE ratio is getting better. Why would you be not happy with this new buying opportunity. Now, if you are not accumulating, I fully get that. That would definitely suck. That's not great. But if you are still buying, what is there to be upset about? The business is getting stronger. And this is a little bit hard to believe, but most analysts actually are saying, surprise, surprise, Tesla stock is a good investment opportunity. That an average price target being at $300. So if Tesla goes up to $300 in a year, that's more than 50% return. It's preposterous. So prepare yourselves for an epic time, although a cold macroeconomic environment. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postis, reporting to you from Vancouver City, Canada. Make sure to like and subscribe if you haven't yet. Thank you for watching.